We know that debt isn't something that you want to take on too much of, but most people are going to need credit at some point in their lives. So we wanted to do an episode on how to get started building credit as a beginner, because I have a 17-year-old, so this is kind of a topic that has become more important to me, that I don't want him to build a lot of debt, but I do want him to be able to get a car at some point or buy a house and not pay out the nose in interest. So I did some research on this, more so for myself, but I thought also there's got to be some other either parents or young people who maybe just finished college who could use this information. Today, I've got Chad Roller out of our Conway office with me today doing this episode. So thank you, Chad, for coming. And we're going to give basics in this episode. And then our next episode, we're going to go even deeper into building credit or repairing credit for those that may have damaged it.
Okay. Yeah. So, what is credit? I think it's good to start out with kind of defining what credit is. And basically it's your ability, it's the banks or the lending agencies, it's their evaluation of how good you are at paying back your debts, that four-letter word, right? So we're going to borrow money. So do I have credit? Do I have credibility to that lender to say, hey, we are willing to lend you money because we think you're going to pay it back?
Yes, and it's like telling a story. There's this pathway of how you've done at paying people back. And your credit score is based on what exists in that story. Have you been diligent to pay things when they're due, or have you made some mistakes? But if you're young, you may not have any yet.
Right, because, a lot of times it's going to come with experience, right? And so you think of it from a bank standpoint. If I'm viewing a young person, I'm not sure of what their experience is in the work life, right? I don't know, not experienced in their assets. So they're just, when you're just kind of getting started, how does someone kind of give you any credit or credibility? So you can think of it as just as if you met a young person until you see their work ethic, or if you're around them a little bit, you're not quite sure kind of how much you may be able to trust them, or maybe willing to lend them the keys to your car or anything like that, right? So I think establishing and understanding, okay, hey, why can't I just go out and borrow as much money as I want? Because there are some risks to that, right? To the lender.
Well, and I think of this like that concept of new graduates where they apply for jobs, they don't have experience because they just came out of college. And so like, oh, well, you need more experience for this job. And you're thinking, well, how am I going to get experience if I can't just get the job? Yeah. So it is somewhat like that with credit, but there are 3 different reporting agencies that develop these scores. They are Experian, Equifax, and TransUnion. And lenders use your score to determine, like you said, how likely you are to pay back debts. But what that turns into is what interest rate they're going to apply to your debt. So, you may have a car note that has a higher interest rate if you don't have a good credit score. And it can cost you over time.
Right. Because if you've got some flaws in your paying your ability to pay back your bills, then obviously there's going to be a little concern to that lender. So if they're going to assume more risk, then they're going to get paid for that. Yes.
And I think too, what's interesting is each of those 3 credit scoring companies uses a little bit different math. So my credit score can vary quite a bit between those 3 sometimes. So they're all using the same data, but they apply a different formula to that data. So that's what credit is and why it matters, because if you do have to get a loan, like a mortgage even, a couple of percentage points can really add up over time. So we want to make sure you understand what it is. But let's say you're that person who, you've just gotten into college, you're young professional, and you're saying, well, how do I even get started? There are a few different things you can do. The first one I actually just did because it occurred to me when I was doing this research that I could do this. You can do a secured credit card. So I just did this. My niece just did this. She is young 20s and wanted to start building some credit. So she put money on deposit with the bank. They gave her a credit card that has that same limit. So if you put $500 down, $500 limit, and she can use it and then pays it back. Use it and then pay it back. And what it does is it takes the risk out of the bank's hands. They get to charge you a fee if you don't pay it on time. That's where they get their money. But you can start developing that track record of paying it on time without having to get someone to truly extend you credit. You know what I'm saying?
Yeah, and let's just face it. Everybody there's very little cash being, and I'm looking over here at the one that doesn't carry cash, right?
I literally never carry cash. He makes fun of me.
But I will tell you, hey, something for me, and I carry little cash now, but I even changed wallets because to a smaller just card holding, because that's what everybody takes, right? I mean, you got to get a hotel. You got to put a credit card down. You've got to, it seems like everything, if you're going to have subscriptions online, you want those credit cards. And I use the credit card instead of using my debit card. Now, that's just something quirky about me, but I like to utilize for subscriptions, those type of things that I'm going to have online, whatever it may be that I'm paying for online. I like to use the credit card.
I like the safety. If someone's going to steal my information, at least they're not accessing my bank. I don't want someone to have access to my actual bank account because I pay my bills out of that.
Right.
And if someone's going to use it fraudulently, I definitely don't want to use my debit card for that. So I'm with you. I use my cards for online purchases or for hotels, things like that.
But I think that's, getting started, that may not be a good idea for someone just to use everything on the credit card, especially if you're getting started and you're trying to establish that credit score, because you start getting into, well, I've got a lot on this credit card. Maybe I have a bad month, don't get some of it paid back. I miss a payment, those type of things. So if you are getting started and you're saying, hey, I want to get away from utilizing my bank account and I want to use a card for everything, then you still got to really make sure you're creating disciplines, because starting out with some bad history can really affect you down the road.
Yes.
So just, caution to the wind there, that if I'm going to utilize the credit card for everything, make sure that you are disciplined behind that. But I like to use the credit card for my purchases and then, pay it off each month. That way I'm not exposing my true banking checking information to the World Wide Web, right?
Well, and I think too, the other thing you can do if you're building those habits is pay it every week. So, you can budget. I've got X number of dollars. I can buy my groceries with it, but I'm paying it on Friday every single week. If you get in the habit of paying it off consistently, instead of letting it accumulate for a month where it can get out of hand, it's so easy to overspend when you're not seeing a balance move. And then making sure you're utilizing apps to track that balance so that you're not just letting it go till the statement comes in or until you get online.
Yeah.
And I encourage people who are getting started to get paper statements. I know that's a weird thing nowadays, and there is some risk, if someone steals it out of your mailbox. So make sure you've got a secured mailbox. But that's your reminder to pay it, because if it's all digital, it's really easy to miss.
Right. And so that credit card can kind of lend to that next big purchase. So obviously, if you're going to go purchase a car, and we've seen what the cost of cars are now, just, you're not going to go buy that $3,000 to $5,000 car for cash like you were, years ago. I mean, there's a lot more those $10,000, a lot more expense out there for a $10,000 to $20,000 to $30,000 car. So a lot of times people are going to finance that. So that's where that next big purchase typically we see as new investors come in. They've started with a card. Now they're going to go purchase that vehicle on their own.
So applying for a secured credit card is a step. Another thing you can do, and this is the one that I actually did this week for my son, is you can make someone an authorized user on your account. So as a parent, I've added him as an authorized user on my credit card account so that my history can become his history. So as I'm paying the card and I'm doing all that, it is adding to his, because I have a card that reports. You have to make sure it's a card that reports to the credit reporting providers, but that's one thing I did. Now here's the kicker with that. It's my risk. So if you're going to do this for someone, make sure you're managing control. My son will never know that he's on this card. He is not going to have access to this card. I'm not giving it to him.
Not even 500? Not even 500 limit?
My son.
Just a little bit?
Yeah, no. I could see him easily spending more than he means to. So for my case, that's not where we're going to go. But for some people, they'll do like a gas card where all they can do is go to the gas station and get gas. If you're already helping your kid pay for that anyway, that might be a good way to teach them and make them pay it off, again, weekly, so that they're getting in the habit of not letting that spending accumulate. And then the person who's the primary card holder is responsible for all the bills in this situation. So that is really important to understand. Another thing you can do is take out what's called a credit builder loan. Some banks offer these. This is like a small loan, $300 to $1,000. And in this case, the individual would be responsible for it. So if my son were to do this at 18, he would have to be 18 to sign that. He could take out a small loan, You have to put money in the bank to secure it. So it's like a loan against your own savings, basically. But as you make those payments, you're building your credit score if it's a bank that reports.
Yeah.
So we talked about, a secured card. This is like a secured loan, right? Being an authorized user. And then the last one, which is what a lot of people do, is having a cosigner, which we did that for Caitlin. When she got her first car, she didn't have enough credit to do it herself. We co-signed because she's responsible. I don't know that I could do that for all of my children, but with her, I knew I could. But it helps her build credit by making those payments. But we are also legally responsible if she defaults. So again, you got to make sure that your kid is someone that you feel like you can trust before you go with any of these options where you're co-signing in some way.
Yeah, and I think that's, good experience for them. And then also you're going to save a little bit on interest too. Obviously, as a parent, hopefully you've got a better credit score than your child. So you're going to be helping them get introduced to debt or that credit, having that availability to a credit card at a lower interest rate too as well, because hopefully it's on your credit score and that credit score is going to get you a better introductory rate. So there's a little bit of benefit there from just an interest rate standpoint.
Yes, and I think it's important to understand with all of these, though, bad decisions, bad prizes, if you don't pay those on time, no matter which method you're doing, it's going to hurt your score. So you want to make sure you're really diligent on those payments.
Yeah, and we've talked about this a lot of times on the radio show and the podcast about, I use the card like carrying a pocket knife. I can carry a pocket knife and carry it for a lifetime and never use it as a weapon, right? I can use it as a tool.
Yes.
So but that pocket knife could easily be used in the wrong situation. It could be used to harm, those type of things. But as long as I'm using it as a tool for what it was designed for, then it is a very handy tool to have in my pocket. So the same with having a credit card, utilizing it for transactions, being efficient with your transactions, being able to track your expenses. Those type of things can be very useful in today's society because, let's just face it, nobody really carries a lot of cash now, right?
Or accepts cash. Right. There are a lot of places that won't even accept cash.
But at the same time, that credit card in your pocket can be very harmful to you financially.
Yes, and I did some of that, and there's been times in my life where I've gone, woo, I went a little too far this month or something like that. So it is so easy to do. And then the last point is, how long does it take to establish credit? At minimum, you're going to need about 6 months. So if you're planning a purchase and you want to be able to get a good score or a better score, improve your score, you need to give yourself about 6 months to really work through this. Each good decision, though, makes progress. So it's not like it takes a full 6 months before you have any progress, but usually it takes 6 months to really see any momentum.
Yeah, and you think about it. I mean, you get a job and the first week you come to work on time, okay? Well, that's great, right? But that's a week's worth of credibility. So the credit card companies and lenders can you consistently month after month make those payments back and make sure that you're not overspending and creating good habits. So again, that timeline is there for the protection of those lenders.
Yes, and once you've established what method you're going to use to build your credit, it's important that you develop healthy habits. We've talked about a few of those here today, but make sure that those habits start young. Or now, if you're not super young like me, just start today with using it the right way, making sure that you're keeping it in balance with your other financial decisions so that you don't let it get out of hand like you talked about, using it for a tool and not a weapon to your financial journey. So it's time for our 2 cents, Chad. I'd love you to go first and kind of give us your final thoughts on this.
I think we have to obviously adapt to change. Debt has been a 4-letter word, and it can be a 4-letter word, but utilizing it as a part of your overall finances and managing that can help you continue to make disciplined decisions and, strive to get to financial independence. Sometimes we have to go into debt to make some progress. I mean, there's just some times that we've got to do that, but also just utilizing the credit card not to go in debt, but just pay for expenses.
Yes.
And create those disciplines and create those efficiencies and utilize it as a tool.
Awesome. And I think, too, we're going to go into more detail in our next episode about how to increase your score or how to recover your score if you have made some poor decisions in the past. If you're just getting started, we hope we gave you some steps to get started on the right foot. But then also, if you want some more details, we're going to go into that in our next episode. Thank you guys so much for joining us today on Talking Sense. We are almost ready to kick off Spark. This is our new program for young investors or people who are just getting started to help educate you and provide you some low-cost options to get you on your journey to financial independence. If you're interested in that, you can get a free initial meeting with a Spark advisor by emailing us at spark@getreadyforthefuture.com. We'll see you next week. Thanks for listening to Talking Sense. And if you like what you hear, make sure and subscribe to the podcast to get all the newest episodes. The Jim Wealth team is available to you 24/7 at info@getreadyforthefuture.com or by calling our offices at 866-653-PLAN. That's 866-653-7526. And while we like to have fun here, we're also financial advisors, and that means disclosures. You should personally consult a financial advisor before making any investment, and no strategy can assure success. Securities offered through LPL Financial, member FINRA SIPC. Investment advice offered through Independent Advisor Alliance. Independent Advisor Alliance and Jim Wealth Financial Advisors are separate entities from LPL Financial.